Our first case study is going to be a company called O'Reilly Auto Parts. Ticker on this is ORLY. Now, O'Reilly is a U.S.-focused auto parts retailer with almost 5,000 stores and almost 90,000 employees across the United States. They generated $14.4 billion in sales and $3.3 billion in EBITDA in 2022. Market cap is currently around $55 billion. Now, no doubt you've seen O'Reilly Auto Parts stores around the country. They cater to both your local auto repair shops when they need parts, but also to do-it-yourselfers and supplies for the general public. Now, the model is very traditional brick-and-mortar retail store. There's a lot of these stores around, partly because of the nature of their customer base. Both the local auto parts shop or the local auto body or auto repair shop needs parts, and they will tend to need them fast, and so O'Reilly has to operate on a very decentralized, high inventory model, which has a lot of different parts in a lot of different locations. Now, as you can imagine, in an automobile, there are a lot of different parts, and there are a lot of different parts that fit very specifically to individual models. So the inventory needs and the logistics of managing that inventory for O'Reilly can be quite challenging. Now, the primary revenue driver for this company really comes down to the number of stores and the average sales per store. If you were modeling O'Reilly, and remember that the course does include a full working model for O'Reilly Auto Parts, you wouldn't attempt to try to break it down by individual part because there are just too many of them. So instead, what we do is really focus on the stores and the average sales per stores. Now, for example, in 2022, O'Reilly opened 187 new stores, and they'll probably open around another 180 or 190 in total in 2023. That represents a growth rate of about 3%, nice, steady, in line with GDP growth. This is a driver that's largely in management's direct control, which is very important to differentiate from some things that might not be in their control. So we assume a similar rate of growth for that line going forward.